It may look like toothpaste, but this 3D printing technology is spitting out a 1,900 square foot house. This is the final product.
We're trying to build houses in half the time for half the price.
Hey everyone, Ben here and welcome to Motivation to Invest. 3D printing is a game-changing industry which allows the rapid prototyping of parts, everything from automotive parts to medical supplies and even jet engines. So in this video I'm going to dive into a brand new SPAC stock of which ARK Invest has invested into in the 3D printing space. Now this is a really interesting company because it's also backed by Ron Barron at Barron Capital, who is one of the original Tesla backers, and also a strategic investor and customer of this company is Elon Musk's great SpaceX. So this could be a really interesting play as part of your speculative portfolio. So before we get right into that, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you guys do find any value in this video at all, and you do appreciate the research which has gone into it, then feel free to give it an early thumbs up. That helps out tremendously with the channel. And if you guys do want to know in real time exactly which stocks I'm personally buying, selling, and access my entire portfolio, and join a thriving community of some of the finest investors on the internet, you can also talk to me directly about your own investing and investing decisions, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, let's dive in. So firstly, what's so special about the 3D printing industry? Well, let's just dive into this industry statistics. So we're here on Grand View Research. The global 3D printing market size was valued at $11.58 billion in 2019 and is expected to grow at a compound annual growth rate exceeding 14% from 2020 to 2027. So this is a rapid growing industry which allows the rapid prototyping of very complex parts. So let's not waste any more time. Let's hop over right now to ARK Invest live trades. So these trades are from the 9th of April 2021. And as we can see here, Jaws Spitfire Acquisition Corp. Now, I always watch ARK Invest trades. I don't follow them exactly, but I track ARK Invest trades quite regularly in order to highlight interesting stocks for you guys on this channel. So the ticker symbol for this is SPFR, and from that straight away I could tell it was an acquisition company. So ARK Invest has done 2 buys of this straight away as soon as the acquisition was announced. So let's dive into what this company is about. So this is a SPAC company. So for those who don't know what a SPAC is, it basically stands for a special purpose acquisition company, which is basically like the new version of the IPO, but the really early stage IPOs. So imagine you've got an IPO, which is a private company going public. The type of companies which are involved in SPACs are generally one stage before. So really it's like a late stage venture capital to public company, if that makes sense. So the stock anyway, Velo 3D, confirms stock listing via SPAC merger with Jaws Spitfire. Great SPAC name, by the way, sounds very aggressive. So 3D printer manufacturer Velo 3D has confirmed it's entered into a definite agreement to go public via a SPAC merger with blank check company Jaws Spitfire Acquisition Corporation. The deal is expected to complete in the second half of 2021, at which point the combined entity will likely be valued at approximately $1.6 billion on the New York Stock Exchange under the ticker VLD. So that's once the merger has complete. So if we dive straight into the share price here, this is the acquisition company at the moment, SPFR. Still at around $10 per share. And I must state this, as many of you guys probably are already aware, the market for SPACs has changed. The market for growth stocks has changed. In 2020, any SPAC, it was difficult to actually get in at $10. But now the market's changed due to rising interest rates. Many SPACs are actually trading at quite low levels right now, which could present many different buying opportunities. But also, we need to think about our opportunity cost. There's plenty of opportunities in the market right now. So that's actually a good thing for us as investors. So Velo's growth strategy will focus on the high value metal parts that only its support-free metal 3D printing technology can produce. So this company has a unique technology and a series of patents to protect this unique technology. So firstly, it's involved in the 3D metal parts printing space. And let's say you want to create a really complex jet engine part using a 3D printer. Now, generally, you'd create something like this and you'd use what's called supports. So these are basically other materials which support the structure to allow complex geometries to be printed. Now, of course, there's many issues with this, such as extra time, extra cost, and also helps to stop a lot of complexity which a company may wish for their parts. And this is why I believe SpaceX is a real advocate of this company. So this is their game-changing support-free technology. So really this company does have a competitive advantage, a moat around the business, which is this unique technology. I can't see anyone else who's got this type of technology at the moment where you don't need supports for complex parts. I'll show you an image here to help show you guys exactly what it is. So you can see that image here, and you can see these lines here. These are supports. So let's say you're making this complex part here, it won't hold itself up on its own, so you use these supports. Now, it's okay for a part like this, but if you're creating a really complex part for a jet engine, for a complex part of a rocket, of which SpaceX has done, that's probably SpaceX's rocket there in the background, then that is why this company has a unique advantage. So here's a quote from the head of additive manufacturing, so the head of 3D printing at SpaceX. Velo 3D is at least 5 years ahead of any competition. So this company has a unique technology. So that's the first major selling point for this company. Now, if we dive into a couple of backers, so of course I've mentioned Ron Barron earlier, one of the original Tesla bulls. We've also got Social Capital's Hemisphere. So we know that that's run by CHAMATH Palihapitiya, one of the great venture capitalists. He also took Virgin Galactic public. So very interesting backers, but it must be stated, guys, these guys got in, a lot of these guys, Barron Capital and Hemisphere, which is CHAMATH's company, they got in during the PIPE, I believe, for the actual SPAC. So the only company I can see who's invested into it after the actual company has gone public is ARK Invest. So these guys basically got a little bit better deal than the retail investors. But this is just the game we're in, guys. Great backers, great investors into the company. Strategic customer, SpaceX, who's also a strategic investor. And they have a unique technology with a variety of patents. This is their technology protected by deep IP moat, so intellectual property. 48 systems, methods, and composition of matter-granted patents. Multi-layer IP protection approach makes infringement extremely risky. So this does seem like a great, unique selling point with this company. The real key question, and I'm going to dive into this with this company, is what is that protection worth? So the fact that this company can use support-free 3D printing, what is that worth as a business? So I'm going to dive into that in this video also. Let's say you're trying to print this turbine. So this is a really complex part. You're trying to print this, 3D print this in metal. Let's say you're doing a lot of different prototypes. For example, a company like SpaceX, we know they have to be doing lots of different prototypes because their rockets keep blowing up. So they've created a rocket with unique parts. They send it out to the sky, it blows up, then they're going to need more of those parts. Or let's say one of those parts needs replacing, then they want that specific part actually created to actually fix the actual issue. So it's no surprise that SpaceX is a major customer for this actual business, and they did decide to be a strategic investor. Now, the risk with this, I noticed on the company's risk part of their presentation, was they stated a large proportion of their revenue, 30 to 70%, was from a single customer, SpaceX. So that is a risk for the company. But yeah, here's an example of a gas-powered turbine becoming more common as it enables design freedom, lightweight, and better performance. But some parts, like this Sierra turbine, will be impossible to manufacture using conventional constraints. So something like this, according to this company, will be impossible to manufacture with a traditional 3D printer. So that's the unique thing with this company right now. It must be stated, at the moment, this company is a very early stage. So they have this fantastic technology, which is great, but it's still early stage. They have quite a low amount of revenue at the moment. So this is the company's strategy. They plan on creating a blue ocean market. So a red ocean market is you're competing in an existing market. Blue ocean is you're creating an entirely new market. That is a good strategy to actually do. You don't want to compete with other people in a marketplace. Land and expand strategy, expand competitive advantage with new products, accelerate new customer acquisition. Blue ocean, so this is the target market which this company believes it can create, is around $20 billion. So this is a disruptive company, and that is why ARK Invest has invested into this company. They do have some fantastic customers. So SpaceX is the main customer, makes up the majority of this company's revenues. We've got Lockheed Martin, we've got Astra, which is a rocket company, I believe. Then we've got in the aviation defense space, we've got Honeywell, Raytheon, Triumph, leading jet engine manufacturer. And then in the energy sector, we've got Siemens, we've got ConocoPhillips, Mitsubishi. So they've got many different customers here. Honda, Stratasys, which is a 3D printing company, which I'm going to dive into a little bit later in this video. So let's get into those juicy financials. So fast revenue growth and strong margins. Now, it must be stated straight off the bat, guys, this is what the company is projecting. So this is actually what they believe they can achieve, but that does come with risk, because anything that you're looking into the future, that comes with extra risk. In 2020, they only had $90 million in revenue. Now, they're expecting that to grow 41% 2021, $26 million by 2021, $89 million by 2022. And then by 2026, the company's expecting to have over $900 million in revenue. So they're expecting really fast growth, 237% growth in 2021. To me, that seems extremely fast growth. And perhaps they have something in the pipeline, or perhaps they're just really optimistic. So we'll have to see what happens there. It is unique technology. My key issue is, what's the value of that technology? The pro forma enterprise value, if we minus the cash, is $1.6 billion. So this is what the company is expected to go public for. Now, one thing you must be aware of, guys, on these presentations, and my goal on this channel is to give you guys the most transparent advice. Companies will give you obviously their side of the story. I'm actually an impartial person. So pro forma enterprise value to 2025 revenue is only 3. So you say, oh, Ben, that sounds like a cheap company. You're only paying 3 times the company's revenue, but that's in 2025. So that's the risk there. So what I've done for you guys is I've done a little extra valuation here, and I've looked at the price of sales today, 2021, 2022, and 2025, because the further we go out into the future, the more risk a company has, and that's what we need to assess with a company. So overall, if I dive into here, price of sales on the 2021 revenue, so 1.6 billion divided by 26 million is 60. So it's got high valuation in the short term, 2021. 2022, 1.6 billion over 89 million projected revenue is 17. So not too bad for 2022. But at the moment for 2021, the valuation has looked really high in the short term. So really it's all, again, this company is priced for perfection. It's based on future projections, on the belief that this company's unique technology will be widely adopted, even more so by SpaceX, but other companies in this industry. So what I've done is I've compared this company to another 3D printing company in the space. So here we can see Stratasys. So Stratasys is another 3D printing company in the space. This company's a little bit more established. ARK Invest also has quite a large stake in these. These are in ARK Invest 3D printing ETF. I did a video on that previously. So this is Stratasys. This, of course, has all the different 3D printers that people can buy. They also do with they also have metal products also, but this company uses these supports, which I showed you earlier. These here. Price of sales for this company, Stratasys, at the moment, the stock's had a major correction, is 2.9. So you're only paying 2.9 the company's sales. Now, if we dive into the share price here, Stratasys has had a major pullback. So the stock's down 54% at the moment. Now, this could be the general market correction, which is affecting many growth stocks. 54% down. To me, Stratasys isn't looking bad in terms of value at the moment. Now, to me, Stratasys could be a very interesting company to invest into if you want a value play in the 3D printing space. Now, firstly, with Stratasys, the risk with the company, it's still an unprofitable company. So that's the risk. They are expected to be profitable in 2022. They have a strong balance sheet. The growth has been declining slightly this year in 2020 also, but they're a value play in the 3D printing industry. Now, this is the question I want to give to you guys, and this is the question I'm asking myself. Stratasys' price of sales is 2 in 2020. This company's price of sales, Velo 3D, is 60 for 2021. So is this company worth 30 times more in the short term than Stratasys? It's a unique technology. Now, personally, I think it's difficult to say that it's worth 30 times more than Stratasys, which is a major player in the 3D printing space. Overall, I personally would say the stock is worth a small position, a speculative position for a long-term play. So not really making up a large portion of your portfolio. No issue with the company, just they have a lot to live up to, and the market has changed right now, so there's a lot of opportunities in the market. So to me personally, it's worth a small position in your portfolio, or it's one of those companies which I would definitely 100% watch very, very closely to see how this company performs in the next year or two. If it does start hitting their growth trajectories, then maybe you could jump on the bandwagon then. So this does seem like a very interesting company overall. I like the technology, I like the customers, I like the backers. But again, guys, as it's a SPAC, I wouldn't allow it to make up a large portion of your portfolio. Now, if you guys do want to know exactly which stocks I'm personally buying, selling, and access my entire six-figure portfolio, the stocks and the story of how I grew my portfolio from $20,000 to over $250,000, so $250,000, then feel free to check out that first link in the description below for the VIP membership group. And you also get access to a thriving investing community, and you can talk to me directly about your own investing portfolio and decisions. And if you guys did find any value in this video at all, feel free to give it a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to hit that subscribe button and turn that notification bell on. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.